Good morning, love people. Welcome to the Morning Blast. It's Monday, the 19th of January. You join myself, Ryan, and of course, Michael for a very candid, blunt, expletive-filled rundown of what's been occurring over the weekend as it's Monday. And as it's Monday, a look ahead, not just to today, but the week ahead. And it's been, as usual, recently, a headline-fueled weekend. We've had some significant, what's the word? Yeah. What word would you sum up the weekend's action, Michael?
Well, very good morning, Ryan. Good morning, everyone. I'm not sure one word suffices, really.
No, it doesn't.
I mean, the way I framed it to a reporter at Blew Me last night was
at least fucking name drop. Jesus.
at least we've had one normal weekend out of three so far this year, but suffice to say, it wasn't the one we've just had.
Have we had a normal weekend?
Well, the weekend before last was relatively subdued, wasn't it? No
do
wars, no explosions, no special military operations.
I can't even remember, to be honest. It's all a bit of a blur. Right. Yes, as usual, just crack on, I guess. Nothing discussed on the podcast is trading investment advice, yada, yada, yada. You know the score. Do not listen if you're got tender ears and don't like
sensitive disposition.
Yeah, exactly. Far, you mug. Right, let's get cracking with. I didn't sleep very well last night, so I'm a bit like discombobulated.
Good word.
Well, thank you. I'm not sure how I managed that because I am very discombobulated. Right, mind the gap time, according to Clive, and he's dead right, because obviously with the shenanigans, there we go, shenanigans, that's a word for the weekend. Because of these shenanigans that we've had over the weekend, we've seen a gap lower in equities this morning based on the weekend headlines, and it's a US holiday to boot. Myself and Michael have been putting out various warnings about that. It's low liquidity, etc., just to make things a little bit more spicy, in Clive's words, and he's dead right. Bund futures, German bonds have responded with a bid, obviously as the risk-off trade. Euro dollar saw red again on Friday, but it's green overnight and bouncing with its 200-day simple moving average. Bitcoin continues lower after last week's failure at the 98,000 Fibonacci level that we've been watching for a while. Gold, the yellow metal, and silver to continue to shine. Sorry, not sorry. LME base metals saw red on Friday, and there's a few reversal patterns to think about at the moment. LME copper would give a sell signal on a move between below 12,517, currently sitting at 12,817 as Clive wrote this morning. Brent and WTI making this, well, they're taking all this news in their stride, bearish for choice short term. Actually, I did put out an article over the weekend about why, because obviously there's Iranian headlines, etc. Again, and Trump might be doing this, might be doing that. I put out an article why that headlines Iranian headlines don't necessarily mean $100 oil. In fact, they very rarely mean $100 oil. So forget the hype. Henry Hub, US Nat Gas, that's been heading lower for weeks, but gapped up this morning. That's taken a few eyeballs out. That was due to quite significant deterioration in the forecast modelling that was released yesterday. So we saw, I think it was up 10% about 2 o'clock this morning when I checked in. I don't know what it is now. EU carbon markets posted a second shooting star in a row on Friday and has been offered in early trade today. So we could see some further profit taking. TTFs, which is European gas, rallied by another 10% on Friday alone, but it's kicked lower this morning, so no sign of any let up in recent volatility in that one. 33.60 is the level to watch on further weakness to the downside. Definitely a day to take care, and this is words of advice from Clive, with lack of volume states are potentially adding to the volatility. But yeah, thank you for that, Mr. Clive.
Thank you, Clive. The other thing with that is, of course, early close in the states of the CME.
Early close.
I've spent about 3 hours trying to make sense of the holiday schedules that the CME put out, and I believe it's 6 p.m., but don't quote me on that.
Yeah. Yeah, no, do you know what? I've long said it, 25 years man and boy in the industry, and I still cannot understand the CME's holiday calendar.
No, do you know what? I've yet to meet a man who can, or a woman who can.
They did start putting out a simplified version, and it was just basically, it was still the same bits, but they just removed some other superfluous bits that we weren't in there anyway. So
anyway. Right, let's start off with the facts of the situation in terms of what's happened over the weekend, and then we can debate what's going on and what might happen next and what all of the responses might be. From a geopolitical perspective, unless you've been living under a rock. Sorry.
Clive Lambert.
Yeah.
Yes, it's Clive also can't understand CME calendar to be to put it frank, but he used more mean words on WhatsApp.
Yeah, which is an accurate description, to be fair. Anyway, straight face. What's happened over the weekend? Saturday afternoon, President Trump on Truth Social threatening 8 European nations, Denmark, Norway, Sweden, France, Germany, the UK, the Netherlands and Finland with tariffs over, well, the situation in Greenland. Initially, that tariff to be set at 10% from the 1st of February, with Trump further noting that that tariff will rise to 25% from the 1st of June, presumably in addition to the tariffs that these countries are currently paying, with those levies to be in place, Trump's words, not mine, until the US has agreed a purchase of Greenland, with Trump saying that the US is open for talks on the issue. Clearly a fairly significant escalation in terms of the whole geopolitical issue in the Arctic Circle. Go on.
Is this not going to be our main chat focus of conversation?
I'm bringing the debate forward.
Okay, cool.
Because there's not really a lot else going on.
Okay, cool. I was just getting a bit concerned because that's what my notes were and we didn't actually
No. I'm just going to get the facts out of the way and then we can debate to our heart's content. So that's obviously what Trump had to say. The market reaction to that this morning has been, I would term it in 2 words, predictable and relatively contained. If you look at where major markets are trading this morning, we obviously have thinner than usual conditions, as Clive rightly alluded to, but a risk-averse vibe across the board. Equity futures lower on both sides of the pond, with European stocks underperforming, although we are down only around about 1% or so hardly cataclysmic or catastrophic.
Yeah.
Those sectors in Europe that are potentially most exposed to any tariffs that could be imposed are naturally underperforming. Think about automakers, think about pharma companies, think about food companies like Nestle. They are also lagging the pack this morning. We also see in the foreign exchange complex a bit of a sell America vibe coming through, with the dollar lower against most major peers, having initially been quoted firmer at the Wellington Open yesterday. People may be asking why the pound and the euro trading in the green despite the threat of tariffs. I think it's a sign from the market that actually the way participants want to trade tariff threats now is not necessarily the impact of them, given that it's actually questionable whether they will come to pass, but it's more a case of a reflection of increased volatility and uncertainty when it comes to US policy making. And also, of course, you've got to remember the US consumer, if these tariffs were to go into effect, is going to pay the bulk of those tariffs. So there's that in the mix as well. Of course, cash treasury trade is closed today because of Martin Luther King Jr. Day. The government bonds in Europe are trading firmer. And obviously, as a result of haven demand, precious metals continuing to push higher too, with gold and silver printing fresh record highs, silver trading north of $93 an ounce. That is pretty much the facts of the matter. Of course, the EU are planning a response in true EU fashion. They're going to have to host a special European Leaders Summit on Thursday before they can actually come up with a response. We're also due to hear from the British Prime Minister Keir Starmer, who is due to address the nation at 9:15 this morning. So God only knows what he's going to say. But I guess, Ryan, my question to you would be, what are your thoughts? Is this a serious threat, or is this just a classic art of the deal? Trump wants some leverage. Trump wants to throw a negotiating gambit out there to focus some minds before he arrives in Davos on Wednesday, has a few talks, and flies out victorious on Thursday night.
The Arctic of the deal.
Mate, that's terrible. That's genuinely terrible.
Yes, it's better when you write it down because you put the tit in brackets. But there you go. Not that I'm overthinking this. So yeah, I think we know he can be a bit of a loose cannon, quite obviously. It's just the same old playbook, right? Escalate to de-escalate.
Yeah.
He's already been given kind of a couple of outs, a couple of off ramps on this. I've seen Meloni, the Italian PM, kind of has for a long time now been kind of that sensible bridge between EU leaders and Trump. And she's already been on the blower to him, giving him an off ramp, saying, look, it's not, these troops in Greenland. Also, that was another thing. The troops in Greenland were like positioned to be there for 3 days, like for a fairly chunky time. Then you had all the talking heads losing their mind because, Germany, they're secretly getting their troops out yesterday and stuff. No.
Yeah, that they were planned to come home.
Yeah, well, like their mission was only 3 days. And it was basically just to touch base with their Danish counterparts who are based there just to see what they can do going forward. About kind of like, relocation and all this kind of stuff. But it's filed under reconnaissance. Obviously, everyone that's not read but past a headline. It's just read that and got a bit frothy knickers. But yeah, their mission ended on Saturday. They flew back on Sunday, mate. They flew first class on a commercial jet. It wasn't exactly a secret.
They weren't being evacuated out.
No, and they were also wearing their camo fatigues, etc. It's like, just get a grip, people. But no, I do think it's an escalate to de-escalate. Don't forget as well, Trump's put February the 6th as this kind of deadline for the tariffs to go in place, the 10% tariffs. Now, what happens whenever Trump sets a deadline that's more than a couple of weeks away for tariffs? Before we get there, he extends the deadline, or he pulls the plug, or he reduces it. Look, it might not, I'm not going to say it's guaranteed to happen again this time, but that's what's happened every other time we've set a deadline for tariffs to come into place. Now, I don't know the rules, but that's the rule book he's playing by. So yeah, there is that. And also the timing with Davos as well. We know Trump's going over there. Yeah, I think there's a lot this has been mounting out of a molehill time, in my personal opinion. We've got, like Besant explicitly saying on Sunday that no deal short of acquisition is good enough. It's Greenland or nothing. But this is what they do. This is, they're not going to invade Greenland, put it that way. The Greenland, this don't forget that people do live on Greenland, and they do have a say in what goes on. Well, they should do. They've said that they don't want to be run by the US, and they don't have to be. There is a middle ground here where the Greenlanders do want independence from Denmark. And what they could do once they get independence, they do need support, because, they need someone that's going to come in with some help, come in, extract their rare earths, and the commodities that are like underground, and also provide some protection. So what they can do, there's already precedents out there where they have friendly terms with US, where US basically puts some bases on there. Don't forget, there's plenty of countries in the Middle East that do exactly this, controlled by themselves. But they have US bases, and the US is involved in the oil industry over there.
Well, and in Asia as well, of course. Japan and South Korea have got pretty chunky US military presence.
There's plenty of US bases in European countries. There's plenty in Germany. There's plenty in Italy. There's plenty in Spain. There's plenty in Portugal, Italy, UK. I mean, come on, guys. It's like everyone seems to forget the things that are already happening in the world when this kind of stuff happens.
Yeah. So I think you're absolutely right. And I think
my TLDR on
sorry,
this,
go on.
So just to finish off, my TLDR on this is yes, buy the dip.
Yeah, I mean, that's exactly what I said in a client note last night. I think it's understandable why we see the reaction that we see this morning, and it feels like we did say this millions of times last year. If you're running a trading book and the president throws out a tariff threat, and you just sit there and go, nah, do you know what? I don't really care about that one. I'm not going to change any of my positions. I'm not even going to put a tiny hedge on. And then he actually follows through on that threat. You have got a ridiculous amount of egg on your face, because you've basically gone, I didn't hedge the most obvious risk that was out there, which is why you see this modest reaction and bid into havens and flows out of equities today. But I'm completely with you. I mean, yeah, maybe this time is different. You can never rule that out, of course, but I would say it's a very, very slim likelihood that we do see these tariffs going into effect, not only in terms of it likely, if not certainly, being a negotiating gambit, but you've also got question marks over actually how these tariffs could even be implemented, because not only are the Supreme Court imminently going to rule on Trump's powers under the IEEPA, we also have question marks over how you would tariff European Union nations separately, because obviously you have common external tariffs.
Well, this is another thing that I saw. Yeah, because obviously what's the first thing it's going to do? They're just going to ship products from the countries within the EU that aren't being affected.
Yeah, exactly. So I think there's a lot of hyperbole doing the rounds on both sides. I would stress that. I think you've got to view this through the lens of a negotiation, which naturally means that both sides are going to adopt relatively extreme positions first of all, and then come closer to something of a middle ground as those talks progress and as they seek to find an off-ramp from those talks.
And just quite on that off-ramp thing, like we said, Maloney's already been in place, and she's already trying to do the God's work and whatnot. I'd say the biggest concern is that EU leaders say the wrong thing, probably accidentally, or like just anything to really rile Trump for no reason. Like, for instance, like you said, we got Keir Starmer speaking at 9:30, or is it 9:30, 9:15?
Yeah, I think it's 1:15. I'm not sure.
And then, the fact that he's got Rachel Reeves also going to be standing by his side bowl, by the sounds of it, it seems to be making a bit of a bigger deal out of it than possibly he does need to, because if you just stay quiet, Trump will blow himself out anyway.
Yeah, there's a lot of grandstanding going on that I would argue probably doesn't need to happen and doesn't actually benefit anyone by
Exactly
doing it.
that.
Just
I mean,
pick up the phone, speak to Trump, sort it out.
yeah, keep your mouth shut. See him in Davos with, buy him a couple of fucking can of Pepsi or whatever it is he drinks these days.
Well, he's teetotal, isn't he? So
well, exactly. Maybe that's the problem. Maybe the guy just needs a fucking drink.
the solution to all of the world's problems: get Trump to the pub.
Yeah, well, this is it, right? Yeah, I nearly said something that I really shouldn't about the Middle East, but they're moving swiftly on. Oh God! But no, I genuinely think this is something that can be. Obviously, it's one of those things. Yes, we might look back in 2 weeks and say, "Fucking hell, it's got worse and worse and worse." But on the scheme of things, like I said, it's following this escalate to de-escalate playbook. We've seen it a million times already in however long he's been in power. It feels like it's forever. But yeah, it's one of those we must keep an eye on, obviously. And like you said, it's if anything, the risk off we're seeing, in my opinion, this morning. One, obviously, it's on very weak liquidity or thin liquidity. This isn't selling because people think that the world's about to shit the bed. If anything, this is at worst people just taking money off the table rather than going short.
Yeah, just taking a bit of profit. The S&P was basically closed at a record high on Friday at 7,000. So, if you haven't made money being long, then I'd quite like to know what the hell you're doing.
Well, we're off 1%, right, from record highs. This isn't risk off. This isn't market shit in the bed. This is literally just some profit taking. Or just taking off risk. You don't have to say profit taking because who knows? But just money being taken off the table because the volatility. And also, if there's a day to do it, it's a day when the markets are closed.
Oh yeah, exactly that. So yeah, obviously we will monitor that very closely, and we have to monitor. Yeah, quite. The base case is that it is, just to recap, it is a negotiating gambit. It is escalate to de-escalate after the deal, however you want to phrase it, or frame it, I should say. We will keep a close eye on what's going on, and it will continue to drive markets, but that is kind of the working assumption. I did just want to move on very briefly because the thing I was going to talk about this morning before Trump decided to throw tariff threats around again was this issue of the next Fed chair, because there has been quite a significant shift in terms of expectations as to who may get that gig. And there's been a couple of catalysts behind that. President Trump on Friday was speaking in the Oval Office, and he said that Kevin Hassett is very good on TV and that he wants to keep him where he is, which means that, at face value, of course, this sort of live action version of The Apprentice is going to rumble on for a while. But at face value, of course, it looks as if Hassett might be staying as NEC director. That has put Kevin Warsh, former Fed governor, as the market's favourite. I think he's about 40-ish% if you look at these prediction sites. But there has also been a lot of reporting over the weekend that apparently Rick Reeder, his interview last Thursday, the global CIO of fixed income at BlackRock, his interview reportedly went very well on Thursday. That has been reported by both Fox Business and Charlie Gasparino, as well as Bloomberg and their sources over the weekend. Apparently, the people in the room have included Trump, Vice President Vance, and Treasury Secretary Bessent. Apparently, a lot of those viewed the fact that Reeder had no prior experience at the Fed as a, quote, big positive. Of course, we are still awaiting a decision and an announcement and a formal nomination on that front. It looks like it could well be after Davos that name comes forward, but Rick Reeder making a bit of a late charge for the Fed chair job, potentially. So something to keep a bit of an eye on there.
Absolutely that. Yeah, not much more to add. Nice. Is that it?
I mean, unless you really care about Friday's US industrial production data.
I really don't.
There you go.
I really don't. Just word of warning, as it is Monday, and obviously it is shaping up to be very much a week dominated by headlines, therefore headline risk. Expect potentially more headlines than we'd possibly have otherwise regarding Davos and stuff, because Trump will want to be getting in front of every camera possible and being part of every significant situation in Davos. Yeah, so just buy your beds, make sure you're keeping it tight and staying on and monitoring the situation. And you should be using PIQ for that, obviously. Not
Indeed.
the feed, but our app. and our desktop platform, etc., etc. But no, whatever you're doing today and this week, keep it tight.
Well, hang on. Should we do the week ahead?
Oh, yeah, good point. Yeah.
before you prematurely wrap things up. Before I do the week ahead, I did, and I think you reposted this, thank you for that, put out a bit of a summary of some of the key speeches at Davos in terms of the dates and times. We've got a load of EU leaders speaking tomorrow, and then obviously Trump speaks on Wednesday. So do just have a gander at that, because that's obviously something to keep a very close eye on. But in terms of this week, obviously goes without saying, geopolitics, headline noise, headline risk is going to remain a big focus for market participants. Today's data docket is a pretty light one, unsurprisingly, with the US away for Martin Luther King Jr. Day. Moving into the rest of the week, just to pick out a few sort of choice highlights from the next few days, it's going to be a busy week of economic releases here in the UK. We get the latest employment data early tomorrow morning. That's then followed by December's inflation numbers on Wednesday, the latest public borrowing data on Thursday, and then on Friday we have both retail sales for December and the January flash PMI metrics. So quite a busy week of UK economic releases. I think naturally the majority of attention will fall on the jobs data that we get tomorrow, which is expected to show unemployment holding around that 5.1% mark, and also the inflation figures that we get on Wednesday, which is expected to show headline CPI rising just modestly to 3.3% from a prior 3.2%. For context, money markets effectively don't price anything from the BOE until the second half of the year in terms of rate reductions, so potentially some scope for a repricing on the back of that. Speaking of policy announcements, we do have two G10 central banks announcing policy this week. They are the Norges Bank on Thursday and then the Bank of Japan on Friday. Neither is expected to make any changes to monetary policy or to their forward policy guidance. Actually, speaking of Japan, bear in mind that Japan's parliament returns to session on Friday, and the expectation is that the Diet, or the lower house of the Diet, is almost immediately dissolved so that Takaichi can call an election in early February. In terms of other bits and bobs this week, there are a few lower tier US releases that might attract a little bit of attention. I guess Thursday is probably the busiest day with the final read on Q3 GDP, although that is very, very stale by this point, as well as November's PCE figures, which is, of course, the Fed's preferred inflation metric. Sticking in the United States, as I alluded to a short while ago, the Supreme Court is set to issue opinions on Tuesday, which may or may not include a ruling on the IEEPA tariff case. Sticking with the Supreme Court, on Wednesday, they will begin to hear oral arguments in the case of Fed Governor Lisa Cook and her appeal against her dismissal on allegations of mortgage fraud, which has obviously taken on greater importance now in light of the DOJ subpoenas towards the Fed and towards Chair Powell. And not forgetting, it is quite a busy week of corporate earnings this week as well. I think about 34 companies in the S&P 500 set to report, including bellwether names such as 3M and Johnson & Johnson, as well as Netflix, who report after the close tomorrow. And participants there will not only be looking for an update on subscriber growth, because it does increasingly look as if we've reached quote-unquote peak Netflix, but also looking for an update on progress with regards to the Warner Brothers Discovery deal, which is continuing to rumble on. So a fair few moving parts in the mix this week. Geopolitical events obviously going to be the focus, and a lot of attention on what's going on in Davos this week, but plenty on the economic calendar to keep us busy as well.
Yeah, no, exactly that. One to watch out whilst we're in Davos is obviously the Davos bubble, because obviously, as we know, you got the Washington bubble, the fucking Westminster bubble. The same, very similar thing happens in places like Davos, where they'll be going around in their $4,000 Canada Goose jackets, telling us how we should be cutting back on fossil fuels, etc. But yeah, we'll see what happens.
I can tell you're a fan.
I fucking hate Davos and WEF. It was like Scaramucci tweeted yesterday about he's getting ready for the 15th annual WEF wine night,
yeah.
And he's got fucking this like load of bottles of Petrus out. I mean, like, mate, do us a favour, fuck off.
Also, the other thing with Davos, without wanting to turn this into a complete and utter rant, but I think it was Tom Wiseman. He was absolutely spot on. If you pay 50 grand, you'll get a ticket. Yeah, they don't really care who they're letting in.
No, of course not. I mean, me and you, maybe this time next year, Rodders. We'll see. Yeah, exactly. I've got my lucky blue tote ready and waiting. More Stone Island than Canada Goose, but that's.
I was going to say Millwall takes Davos.
Yeah, exactly that. Mill. Right. On that note, Michael, pleasure as always. I hope everyone had a great weekend. Go out and get some for the week ahead. We'll see you all
But not
tomorrow.
today. It's a US holiday. Be
Not
careful
tomorrow.
today.
Keep it tight today. Keep it especially tight.